Hi, we're back with an early concise highlight on Wednesday, October 14th, 2015. It's currently 7 a.m. U.S. Central Time, and it's going to be concise today because after the full global view video analysis on Tuesday morning and the lower text-based analysis below the video, we are only going to concentrate on the S&P 500 on what is a quiet day so far. So, what has all this meant to the market so far? And what it has meant is that the S&P 500 future, typically short-term charts to begin, hourly on the left, 30-minute on the right, is sitting steady at 1994. Now, of course, it has been a bit lower. It's been down into 1989.50 as a low. So it has probed the top end of 1990 to 88 support. That's pretty important because you can see not only recent congestion, but that was the resistance it overran on the release of the FOMC minutes last Thursday afternoon. That was the downside reversal it put in from the actual meeting when it had traded up to 2011 on September 17th, but closed back below the 1988-89 area close from the previous day. So it's a very interesting development because, of course, that was the beginning of a whole long break into the support we had down here in the 1866 area from which it put on the recovery, especially after that negative U.S. employment report, and has pushed up pretty markedly since then above resistances like 1945 to 50, which we'll explore further on the intermediate term charts, and the 1970 area. And that all kept it good to then proceed further in spite of the weak indications from those minutes above 1990. So psychologically, if this is back in a bad news is good news market and the news is remaining weak, that's going to be a key area to be tested on the macro technical view. That's where the macro factors were crystallized as well. Now, the higher resistance is up into that high at 2011, which is probed but not really pushed above very aggressively. 2015, major weekly channel down break. And 2020, that was the trading high of the SEP contract back on September 17th as well. It was trading at a premium to December, of course. And much above that, it'd be knocking out that 2015 high and could end up at higher levels like 2035.40 at a minimum. So a pretty big decision as to whether it can hold this setback from near those recent trading highs, no worse than 1988 to 90. And if it can, it could be headed higher still. So that pretty much does it for the short-term view of the S&P 500.